Hello traders, this is Rich from TradeSight. This is the market preview for the coming session. This is for Thursday, August 22nd, 2013. We had a sloppy day today where they tried higher prices, ultimately wound up closing on the lows of the day after the FOMC minutes were released from the previous meeting. The market was down across on all three sides, the S&P, the NASDAQ, and also the Dow Industrials. The advanced declines were weak, and the New York trend was elevated. Let's start by taking a look at the ES futures. Here's a look at the ES futures. The ES did close lower on the day, and the important takeaway, though, is that it did once more try to interact with the 50 DMA, but ultimately lost the two-day range that it had been trapped in and settled on the low of the day. We're 6 days down here, which leaves us some room before we get to the support of 9 days down. And now we can start looking at this 4/8 level at 1625, which is also the origin of this gap right here. If we can't get to the downside, if the market wants to go higher, key resistance is going to be the 50 DMA and the 6/8 level at 1656.25, where we have the highs from the last 2 days residing. On the NASDAQ side, NASDAQ was similar with just a little less enthusiasm. The range was broken to the downside. Again, we retested the high intraday, closed on the low, and also closed below the previous day's range, this previous range. Key takeaway here is going to be there's this little 6/8 level at 3047, and then just below that is the active static trend line, which is going to be even more important for sure. That's coming about 3030, so that's going to be where all eyes are fixed if we break to the downside. To the upside, the high of this range is going to be the resistance areas at 3099, and above that the 8/8 level at 3125. As far as the government bonds go, the government bonds closed at a new low on the move. We're 7 days down now in the secret count, so we're getting close to an area where we could see some support from the 9-day seeker setup. We're just 2 days away from that, so that definitely could come into play here. The key level to watch is going to be the 0/8 level at 100 on the downside. To the upside, the nearby level is going to be the 10 EMA coming in at about 104. Gold on the day was kind of neither here nor there, but it did produce 9 bars up. It's very lateral and still just staging under the static trend line, so we really have to wait for resolution of this little mini area before we can have anything to really trade off of. The oil futures on the day were also fairly weak. We did not make a new low relative to the recent range it's been in, but we did come down to getting very close to the 50 DMA. Taking a look at the individual sectors, the only one that was very strong today was the BTK. That was up on the day by more than 2%. Everything else was to the downside. Computer hardware was near the top, and the housing sector was strong for most of the day, but really started to unravel after the FOMC minutes came out. This was actually the leading sector on the day, the housing sector for the broad market, that is, before we got those minutes. The transports were relatively weak, but the gold and silver index, the XAU, lost more than 4%. The utility index was weak. Drug index was weak. A lot of the interest-sensitive sectors were really notably weak on the day, and certainly we can understand that from the new low in the TLTs. So let's drill down and take a look at some of these individual sectors. Here's the BTK. The BTK was top gun on the day. We did 9 days down here into the 4/8 level, and today we had a little bit of a breakaway gap to the upside, and we did produce a price flip. So we're 1 day up in potentially a 9-bar run. If we do continue to the upside, 2125 is going to be resistance, and then there's going to be very serious resistance at the static trend line that's coming in about 2172. If we fail to the downside, this gap fill is going to be the level to watch at 2021. Banking index is into a very key area of the BKX, is into the 50 DMA and also the static trend line. So that's kind of a double barrel area. It's also 9 bars down. Right now we're kind of winding up inside of the prior two candles, so we really don't have anything technical to discuss as being new. But if we release below the static trend line or above this 10 EMA, it's going to be very notable, and that's going to release the pattern, the energy from this little 3-day pattern here. Next thing I want to take a look at is the stocks. The semiconductors are a little bit weaker than the overall market, just kind of leaking downward here, getting down towards this prior swing low off this 13 reaction to the downside, but for now, just kind of leaking lower. Oil services index was also lower on the day, but not really breaking too hard. Key takeaway here is that this key index is below the 10 EMA and the 50, still above the 200 by a good degree, but this is definitely intermediate term negative. Key support's not going to come in until this 4-ace level. That lines up with the static trend line as well. So there's room here down to this 250 area if this continues to just kind of drift lower. Next up is going to be the XAU. The XAU is still basically in the same pattern. It's really just scratching out new lows here. We're not going to get a change in trend until we get below this 10 EMA. We're 9 bars up as of yesterday, so as we talked about yesterday, we were expecting some weakness in this sector, especially ahead of the minute release from the FOMC, and that definitely played out today. Next level to watch is going to be the 10 EMA coming in about 105. All right, folks, as always, that's going to be it for today. Thanks for listening. This has been Rich for TradeSight.